What's up everyone, and welcome to another Lutheria tutorial. In this video you will learn how to identify a bear trend so that you can ride the momentum downwards on your favorite crypto assets and elevate your profit potential. So let's start off. There's four key elements of a bear trend that you're going to look for. It's a high, low, lower high, and then lower low, and you're going to look for it in that sequence. So how do you identify all four of these elements? So the first thing you're going to look for is a high being set, and the way we first start by identifying as a high is we need to know the price is going upwards. And the way we know that is if a candle's high has been broken. So you can see this, I've labeled this candle's high here. It's at 56,938. We go above it here with this white candle, and now we know that the price is moving upwards. Now, once we know the price is moving upwards, we need to look for a candle's low to be broken to identify that mountain-like formation that a high in price looks like. So you can see we get that right here. This candle here in March 18th, where we went up to 60,129, is going to be our high. And we know that because that candle's low got broken here by the March 19th candle. And so this is our high. Therefore, then we're going to be looking for the second element of the pattern, and that is a low. And the way we look for a low to be set is we need to know the price is going down, and that's by breaking a candle's low, which we just talked about it did right here. And then we're going to be looking for a candle's high to be broken to know that we formed a V formation that a low in price resembles. And so that's what we get right here. We move down, we form a low, we come up, and that is our low right here on March 19th. So now we have the first two elements. We have a rally, and then we have a drawdown. The second thing we're going to be looking for, or the third, is a lower high. So a lower high is where the price comes up, but the high that it forms is lower than the previous high, and that's where that name lower high comes from. So the way we know a lower high has been set is we need to know the price is going up, which we just talked about. It is because we broke this March 19th candle's high right here on March 20th. So the price is moving up. And then the next day on March 21st, we come down and we break this candle's low, which is what we need to form a high, which we talked about back here. Right here, we got the low of the March 18th candle broken by March 19th, and we're coming down. Now we're drawing down, and we need to form our fourth element, which is a lower low. So this lower high is signifying weakening bull pressure. And the way we know that is because we had a rally here that rallied all the way up to 60,129. We came down, we came up again, but this time we didn't go as high as the previous high, forming a lower high and signifying weakening buying pressure because we weren't able to supersede the previous high. So now the fourth element we need is confirmed down momentum, confirmed selling that exceeds the previous low. So here's our low that we set on March 19th. We need to see a lower low, meaning we go below that and then we bounce. So when we're going down, we're looking for a candle's high to be broken by the following candle to know that a low has been set. And we get that right here on March 24th with that upper wick. So the bottom of this white candle is our lower low. So that is the four-step pattern to identifying a bear trend. It is a rally to form a high, a drawdown to form a low, a second rally that is weaker than the first, signifying a lower high, and then the fourth element, which is another drawdown that exceeds the first drawdown, and then is confirmed, this is important, with two candle closes two candle closes below the first low that we set. So we get a candle close here on the 22nd down here and another here that is below that low. And the reason we need those candle closes is because sometimes the whales in the market will try and fake you out where they'll go below a low and look like that you're about to trend bearish, but then close back above it and then rally upwards thereafter. So you need to see those two candle closes below that key low to identify and confirm that bear trend. And then once that is confirmed on the second candle close, you can see here that we get this drawdown thereafter. And here is some profit potential after identifying this bear trend. So I hope this video was helpful for you. If you like this video, please give it a like down below. Also check out our video where we break down how to identify a bull trend. If you haven't already, you can check that out above and subscribe for future educational content around future educational content around cryptocurrencies and blockchain technology. And until next time, onward and upward.